Hi guys, welcome back. Sorry I haven't been on much, but I was taking my daughter back to college this weekend. However, I need to talk to you about Rev and WTF happened today. Oh my goodness, was it a free fall followed by a massive swing back to the upside. Guys, I think everybody really needs to understand when they're playing these stocks what it is that they're holding and what they're targeting, because fundamentals don't mean crap in this play. Nobody cares. The hedge funds aren't buying this because they think it's a great company. They're buying this because they see the opportunity for either getting bought out from their bankruptcy or the fact that they think it's going to run based on the short interest. And guys, something's definitely going on with that number, because Ortex will tell you it's somewhere between 16.9 and 19%. I mean, literally, it keeps changing. FinViz will tell you it's at 50%, and around 30%, I believe, is what Fintel said. But we'll take a look at Fintel and FinViz in a few minutes. Ortex I've kind of had it with because the numbers don't add up lately, so I'm not even going to bother. However, I do believe that there is still a lot of potential in this play, or it never would have rebounded the way that it did today. Guys, they were screwed. They were 100% screwed today, because tomorrow they not only have a bunch of FTDs due, which we're going to cover in this video, but they also have to have the T+2 settlement for all of those options that were in the money. So, of course, what do? They stir up some FUD. You don't think it's a coincidence that it happened to drop midday when they said that, this happened over the weekend, which, guys, nobody's in court over the weekend, so, a little, funny here. But anyways, I don't even care about that, because reality is we all know that they're bankrupt, and, they did get a lot of money towards their bankruptcy to help them recover. I personally don't think Revlon's going anywhere. I could see them getting bought out. But guys, they own Estee Lauder. This is a huge, huge company. And COVID happened. Of course they had financial issues. Who didn't? I mean, women weren't going out. It's not like people were dating and stuff during the pandemic when they weren't leaving the house. So nobody really cared how they looked. We were all covered in masks. And let me tell you, from a female perspective, you weren't wearing lipstick underneath them, because it was nasty. And I never was one for foundation or cover up or any of that sort of stuff. But from my daughter's point of view, she wasn't wearing any of that stuff during the pandemic because it stuck to your face with the mask on. It was disgusting. So of course makeup sales are down. Why wouldn't they be? The whole industry, I'm sure, was shot. So guys, I don't care about any of that. Let's get into what Revlon's doing and why. Nothing I say is financial advice. Remember, this play is a high-risk play. High risk equals high reward, but it also equals high risk. Okay? So you need to know that going into it, and don't put everything you own into this one stock, guys. I do see a lot of potential here, especially with the options that got eaten up today, which we'll take a look at. But guys, you never put all your money into one play, because then you don't worry. If it's only 10% of your portfolio when it drops down, whoop-de-doo, you'll make it back somewhere else. If it's 100% of your portfolio, then you got a problem. All right, guys, let's get started. All right, guys, those of you trading Revlon today know that it was going up very nicely. And right around this time, it was probably about to break out. And all of a sudden, you get this news article that pops up around 1:54 p.m. Bankrupt Revlon says no official equity committee is needed in Chapter 11. Bankrupt beauty product supplier Revlon says there is no need for an official equity holders committee in its Chapter 11 reorganization. Revlon, in a court filing Sunday, said it appears unlikely that shareholders will receive much, if anything, in its bankruptcy, and therefore an official equity committee isn't warranted. It pointed out that some creditors, typically a group ranking higher than shareholders in bankruptcies, have securities currently trading at steeply elevated prices. Guys, again, this isn't a fundamental play. We are not planning to hold this throughout their bankruptcy, which, by the way, they got awarded a lot of funding for if you go back and you read the news. Now, then we get Revlon Cosmetic Company jumps 27 places on the leaderboard to second place. The company, which declared bankruptcy in June, has been a popular stock for retail traders and also attracted heavy short interest due to bankruptcy and credit concerns. Data shows 36.6% of the float short and a cost to borrow of 101.8%. Now, what they're talking about second place is second place in the short squeeze leaderboard, guys, because it is jacked as far as options go and as far as short interest go, because it's probably on the gamma squeeze board too. But as far as being second place, it's on the short squeeze due to the level of short interest that it has and due to the failure to deliver's due and their inability to get them, which is why you had that lovely sell-off created today, because Wall Street is full of thieves. Now, another reason why I am bullish, like I said earlier, Revlon option alert. January 20th, $35 call sweeps near the ask. 240 were bought at $1.50. And they have 30,356 open interest, guys. So during that dump, they had some bigwig buy up 240 of these contracts times 100 shares, guys. So that's 24,000 shares that they're saying when they buy a January 20th call at $35 that they're expecting it to hit $35 or at least substantially go up where they can sell that and make a good profit, guys. So another thing, let's take a look. During that whole sell-off, if you follow me on Twitter, you saw me pull this up. And that's that this is the buys versus the sells. The inflow is the buying, the outflow is the selling. So inflow was 33.81, and this is in the thousands, I believe. And outflow is 31.67. As you can see, all across the board from extra large, large, medium, and small, they were all either equal or higher. So that means that institutions as well as retail traders and, large money, maybe hedge funds, market makers, whatever, they were buying more of this than they were selling, guys. Okay. So it was 16.55% versus 14.40% here. And you can look at the different shadings. But anyways, the net inflow was 2.14. Okay. So that was the difference to the positive. It was 2.14 to the positive. That means that people were doing more buying, guys, than selling. So they created this story, which, yes, this existed. And guys, I could have sworn I read this a couple of weeks ago or a week ago whenever the dollar amount came out for what Revlon was rewarded, that they didn't want that because I'm sure they have to pay for that. So why add additional expenses? I believe that they are actually working on trying to keep this company going. I don't think they plan to, allow it to stay bankrupt forever. And they compared it to Hertz in that article, which it got cut off and I didn't pull the full thing up because, like I said, it doesn't really matter to me. But, guys, Hertz is still trading and Hertz had a massive, massive run on their bankruptcy, right? Just like most companies do. So I'm not buying the FUD here. It's all part of the game, but you have to know and you have to understand that that's the risk you take when you play this, right? So who knows? Retail's they're unpredictable, but they're predictable as far as I'm concerned in the fact that they sell first and ask questions later. So a lot of times they'll sell and they'll buy back higher out of fear. And it's crazy and it needs to stop, guys. You guys need to educate yourself on what type of play you're playing and why you're playing it. You need to have a strict trading plan and you need to stick to it. So when FUD articles come out, or even if they're true, but they're not pertinent to the play, then you need to realize that and say, wait a second, let me think about why would this be coming out today? What does the market maker or the hedge fund need? They need shares, right? Because they had massive amounts of failure to deliver as due today, which I'm going to show you in just a moment. But guys, according to Fintel, As you can see, 36.61% of the float is sold short. And it's 50.78% was traded today in the dark pool. Currently, there's only 1,000 shares available to borrow, and the cost to borrow, guys, is 100.23%. So it doesn't come cheap, and that's nothing compared to the amount of shares that they need tomorrow, because, guys, they have to come up with tomorrow, if they haven't already, which likely they haven't because there hasn't been shares available. They keep failing to deliver these guys. They need to come up with 1,532,108 shares, in addition to the T+2 settlement of options that were in the money this week. Guys, they're screwed. They are literally up like a creek without a paddle, literally. And then today, they had to come up with 1,492,163 if they were even able to deliver this. I highly doubt it. I sincerely doubt it, which is where the FUD came in and, you know, the news drop guys. Who spreads these news articles? They are usually paid off by hedge funds to stir up controversy. But guys, I'm going to show you the breakdown of Revlon and who owns it and why I am not scared until I start seeing that institutions are having massive sell-offs. I don't really care because last I see they're buying more. And okay guys, before I get into the exact breakdown, I'm going to start with some articles and what was trending today, because one of the articles happens to mention my point in the fact that institutions are adding to their position, not selling, which is why I am bullish on Revlon. Okay, so top Wall Street bet mentions for Monday, August 22nd. Bed Bath & Beyond, GameStop, AMC, Blue Apron, Tesla, NVIDIA, PNW, Revlon, AMD, and Oxy. So guys, Revlon key, okay? We have been trending, guys, for like the last couple of weeks. Stocks moving in after hours, Revlon. Top 15 trending stocks on Wall Street bets as of Monday. Revlon. What you missed on Wall Street on Monday. Guys, we were mentioned in this article. Revlon tells bankruptcy judge its shares are likely worthless. That is what they pulled from bankruptcy. Revlon says no official equity committee is needed in Chapter 11. So then they said that it's likely worthless. Well, guys, most of who owns Revlon is insiders and institutions. So I highly doubt that it's going to be worthless. It's possible, but I'm not planning to hold it that long, so I really don't care. But anyways, that's the whole reason for the sell-off. And then Revlon swings wildly as traders play bankruptcy angles. Yeah, guys, because the angles are somebody always knows something, okay? Why would institutions be increasing their buys? Either they know that this is going to squeeze should they ever go bankrupt, but Chapter 11, guys, means they're trying to save the company. They're not trying to close it down. They're trying to save it. Either that or a buyer is probably going to step in and buy them out. This is two big name companies with Revlon and Estee Lauder, guys. Huge, well-known brand name makeups. You know, Revlon obviously isn't what you see at the cosmetic counters when you go into Nordstrom or whatever, you know, wherever you like to shop for your makeup. Macy's, I'm trying to think of places around here. Those are the two that I go to. But Estee Lauder is, and Revlon, if you walk in any CVS or Walgreens or other store, you know, God, I can't even think of what I'm trying to say, like a drugstore, excuse me. Revlon's there. They're even in the grocery stores. For God's sakes, guys, Revlon's everywhere. All right, my point is that it is definitely not something that I am worried about shutting down forever. Something is going to come of this, or institutions wouldn't be picking it up. Now, here's where the good stuff comes in. Well, the options alert was on here too before I show you that. But this is Revlon tells bankruptcy judge its shares may be worthless. This was the whole freak out, okay? And they like to bring it up again because they bring it up at 6:25 p.m. trying to scare those people that were working and missed it, right? Bloomberg. Guys, Bloomberg likes to stir up trouble. My guess is they're shorting this because a lot of times on the Bloomberg terminal, information pops up to try to, stir up the market on things that benefit them. Like when, earning reports are suddenly leaked early. Gee, who's that benefiting? Now, Revlon told the judge overseeing the cosmetic giant's bankruptcy that shareholders don't need a special company-funded committee to represent them in the Chapter 11 case because there's no evidence the equity is worth anything. Okay, guys, well, here's my reason for believing that it is. Where is... I thought I had an article for you showing. Maybe... Oh, right here. So let me read this to you real quickly. The company urged U.S. Bankruptcy Court Judge David S. Jones in Manhattan to reject the request from minority equity owners in part because low bond prices imply that equity has little hope of recouping anything. The company also urged that the interests of shareholders are already well represented in the case by majority owner McAndrews and Forbes, as well as other groups. In bankruptcy, official equity committees are rare because all creditors must be paid in full before shareholders are allowed to recover anything from their investment. The committee representing unsecured creditors also asked Jones to reject a shareholder committee. Revlon stock trading has all the outward appearance of so-called meme stock, the committee said in its objection, referring to shares that rise in value only because of internet chatter, not economic reasons. Yeah, guys, what's the internet chatter? It's not that we think Revlon's a great company. It's that it's a short squeeze play. Revlon shares tumbled as much as 34% to a low of 562 Monday before rebounding to around 822, leaving them down around 3% on the day. That price is up from as little as $1.17 in June. Nearly all official committees are appointed by the Office of the U.S. Trustee, an arm of the U.S. Department acting as watchdog in corporation bankruptcies in the Revlon case. The office appointed the unsecured creditor committee, but last month rebutted the shareholders. The shareholder group, which says it owns 4.7% of Revlon's common stock not held by insiders, asked Jones on August 9th to order the U.S. trustee to appoint a panel. On that day, the shares closed around $8. Okay, that's the first thing I want to show you. Now let me get the second one. All right, Revlon shares traded wildly on Monday with shares falling. Well, we already know that part. So I'm just going to skip that, guys, and I'm going to go to the important part here, which is last week, Revlon ripped higher after Morgan Stanley disclosed it increased its stake in the cosmetic company. Over the last 6 weeks, double-digit daily moves have been frequented. Do you think Morgan Stanley's buying this because they think they're going to lose money, guys? No, I don't think so. I think they know what's at hand here because the writing's on the wall. Because look at this. This, guys, is the breakdown of the shareholders. So, as you can see, this McAndrews and Forbes that they were talking about in that article owns 67.19% of Revlon. Do you think they're going to lose that interest that they have in this company? They're just going to let it melt away? I don't think so. RCH Holdings, 9.59%. Ronald Perelman, 8.38%. Middleman Brothers LLC, 1.84%. Morgan Stanley, 0.76%. Other guys, which would be like smaller institutions or retail investors, 12.25%. 12.25%. That's all we own. Guys, this is mostly owned by insiders and, major investors, hedge funds, Morgan Stanley, McAndrews and Forbes is the big one, guys. Do you think for 1 minute? Oh, and by the way, Ronald Perelman, I think is related to Deborah Perelman, who's the director, president, and CEO of the company. I think that's her husband, but don't quote me on that. But I believe that is who that is. So, guys, do you think for 1 minute that they're going to lose their huge investment here. Think about that, okay? I really think they're trying to stir the pot on this and get us out because they want our shares, because they're desperate. And I just showed you why in the failures to deliver. Now, again, this breakdown I just read to you, the Vanguard Group even owns 0.66%, guys. And there's more. There's 64 institutions involved in the holdings of Revlon, right? It's down 22. You know why it's down 22, guys? It's not down because institutions that were long sold it. This short interest used to be over 80%. It's down because shorts are closing their positions. Institutions that have the stock to lend out to shorts are closing their position because they know it's ripping, okay? They own 45.1 million shares, the 64 institutions that own this, okay? It's owned 86.75% by institutions. And guys, the shorts that closed out only owned 1.51 million. That was the institutions that closed out. Now, interestingly enough, let me just quickly pull up, and I'm going to read it to you. I'm not going to pull up a screenshot, so just give me 1 second. What I wanted to look at was the free float, and I just wanted to verify that it was still accurate. So the free float is 7.5 million. The total shares outstanding is 54.28 million. Now, if you add the 54.2, or you subtract the 54.28 minus 7.5, right, you get 46 probably that 1.5, which would be your institutional shares outstanding, guys. So institutional shares are generally shares that are not traded in the market, right? Giving you a free float of 7.5 million. That's what else is not locked up, guys. So, like I said, this has a ton of room to run. All right, guys. Today, 1.49 million shares were due. Okay. Do I think that they delivered all those? I have no idea. My guess would be maybe because with the sell-off, they might have been able to get them. But tomorrow, the failure to delivers are 1.532 million. Okay. Where do you think they're going to get these shares from? They're hoping to stir up more FUD tonight to get these shares, guys. That I can promise you. And I'd be prepared because tomorrow they're going to probably try to drop more bombs. Know what you own. Know that they need them. Know that on top of this number, all of those options that people exercise that were in the money, including myself, I exercise contracts on Friday as well. They have to deliver my shares, right? So they give them to you right then. But that doesn't mean that they've had them, guys. If they don't, then this is what happens. They become failure to delivers. So I assure you, the failure to delivers have continued to rack up. Now, they were getting them back here as you go up. Well, Wednesday, guys, they have to come up with another 1.045 million shares, okay? So this goes on for the next couple days, provided they did not cover these, which I'm pretty certain they didn't. Look how they got the shares lowered before and were covering the failure to delivers. They were dropping the price, guys. As this price was going down, the quantity was getting less and less because they short this to get shares from you guys. They're hoping to create fear and for people to sell high for them to get it back cheaper. But unfortunately, this has been backfiring because the price has been up on all these FTDs they've had to be covering. So they're not getting what they need. So they're trying to stir the pot. Yes, guys, yes, there's a huge risk. This is a bankrupt company. But go back and read the filings. They secured funding. Go back and listen to things. Guys, go back and listen to my other Revlon videos. Anyways, this is long. I don't want to bore you all to death, but you need to know what you hold. That's my point. If you're going to be in a play like this, you need to know your risk. And yes, this is risky, but there's also a huge reward at the end of the day. As long as we're not seeing that, hedge funds that are long are selling out, then we have nothing to worry about. If we start seeing, filings, 8Ks being filings saying that people are leaving, or we start seeing, that that they're closing their doors and whatever, then yeah, maybe we have something to worry about. Right now, this is a massive squeeze play and a gamma ramp up that's unbelievable, guys. There's a reason this stock has been climbing from $1 up to today. The high was $9.70. My point being, know what you own. Time for it to rip. Let's make them pay us back. I'm tired of the games that they play. Have a great night. Thanks for watching, guys. Keep an eye on Marin tomorrow. I have a feeling that it's going to rip. Also, oil plays and energy plays are coming back in strong. So keep your eye on HUSA, HUSA, Indo, INDO, CEI, Canberra Energy, CEI, IMPP, SNMP. Those are a few off the top of my head that you should definitely have on your radar. Of course, Oxy, XLE is the energy ETF, guys. So those ones might rip. HAL, AR for gas, just a few to keep in the back of your head. HAL is HAL. AR is Ontario Resource or whatever, however it's pronounced. Anyways, guys, thanks again for watching.